Hey guys, and welcome to Road to Forex. Thank you for being with me here today. So let's get into what we have in store. Now it's really good because it's probably one of the hardest things I teach my own mentorees. Yet once you master this skill, trust me, your Forex profits are going to go through the roof. And that, of course, is how to let winners run. Now, in this episode here, I'm going to be going over how I would actually let them run, what I look for in order to stay in a trade. In the next episode, I'm going to go over the psychology of how I stay calm when I've got that extra 2, 3, 4% on top of where my TP was, and how I manage my stop loss and risk while I'm in that trade. So bear with me while we go over it now. So as we can see over here on this screen, this is my strategy. So it's my indicator, it's what I use. That's why you can see the buy around here. That's why we hopped into this trade. Now, usually what I like to do is aim for a 1 to 3. But what can I be looking at in order to say, hey, I think that this trade is going to go further than where my take profit is? Well, number one, I am going to be looking at the take profits and what is happening around that area. If we look at this area here, what can I see? Well, basically, we've got a very, very strong candlestick, a very large bullish candlestick here. And whenever I see this amount of bullishness, I'm always thinking, hey, can it go further? Now, I don't immediately get freaked out when I see a red bearish candlestick. That does not necessarily mean that I am going to exit, because I still do have a large bullish run in this direction here. What I would like to see is 2 or 3 consecutive hours of it either staying in the exact same place or moving downwards. So if we actually go ahead and skip this forwards just a couple of hours, right? And we go 1, 2, 3. What can we see now? Move is continuing to go up and continuing more in this pattern here of large bullish move, smaller red candlestick, bearish, large bullish move, smaller red candlesticks that aren't really going anywhere, which is telling me that, hey, there's definitely still a lot more momentum to be had in the market. Now, as soon as I hit that 1 to 3, which is roughly around this area here, all I have to do is move my stop loss to wherever a 1 to 2 is. Let's just say for this example, it's here. Yes, that does mean that I might lose 1% if it does decide to fall down, but if it does decide to go up, I can hop into it, as well as look for potential exit indicators to show me when to hop out. So let's continue this move and watch what it does. Initially, it starts to fall down. We have some red candlesticks here, but the key is how small they are. Do you see in comparison to these candlesticks here that they're not really going anywhere, they're not actually moving? So that informs me that, hey, the market, it's probably telling me that it wants to stay up. If you really want a little bit of extra help, go on, use the awesome oscillator. It's quite a helpful tool during this area. Yes, you can actually see that even though these candles are red, the awesome oscillator, which is more of a volume oscillator, that's how I'm seeing it, that's how I'm using it, rather than, maybe its traditional use, is all green, showing me that more buyers, more buying pressure is coming into the market. In fact, it's red through this little area here, from this candlestick upwards, which doesn't really make any sense. So I'm looking at this oscillator and it's telling me, hey, I can stay in. So those two things, basically really small red candlesticks in comparison to the really large green bullish candlesticks, as well as the awesome oscillator supporting that, hey, there's more buying momentum coming into the market than there is bearish momentum. Now, of course, I can take it higher and higher and higher. At this stage, wherever we are right now, which is a 1 to 5, I can have this moved up to a 1 to 4, which could be roughly here. And again, I still see that these red candlesticks are not as large in comparison to the green ones. So we can keep on going. Now we see my exit indicator here. This is number 1. We have the dip underneath the EMA and basically a slight engulfing candlestick. Not so clear, but it is a larger one. Now we have a larger red candlestick than we do everything around it, and we dip underneath that EMA. which means that roughly around here, we can look at it and say, hey, we made 4.43%. That's what we can be looking at, right? Which is fantastic. Really, really good. Which means we've made, for me, an extra 1.43%. Now, if you did want to be super strict with this and maybe get a little bit more, what you do need is an EMA crossover as well as a proper engulfing candlestick. So if we actually see what happened, markets decided to go up, continue to go up, and we'll see where this exit signal is. There's your engulfing candlestick, guys. Does it want to drop underneath? Yes, it quite clearly does from this one here. So you could have hopped out at an 8.21. So these are all the things that I look whilst I'm in it. As long as we have an out number of green to red in terms of this, I'm staying in. As long as we have big bullish momentum moves in comparison to the red candlesticks, right? So in this case, bullish instead of bearish, I'm staying in. If the EMA is staying underneath it the whole time and it's just bouncing off it and bouncing off it and going up, yeah, I'm staying in. If the awesome oscillator is saying, hey, even though those red candlesticks are there and they're now outnumbering them in the last 5 hours, but the awesome oscillator is like green, 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 green bar, I'm going to be staying in. It's as simple as that. Use these techniques, play around with them. They are very simple, but it's usually the most simple things in the market that can provide the most value for you. Now stick around for the next episode when it comes out, because we will be talking about the psychology, because the hardest part of this is not actually getting them down and getting into the runners. It's more about how to stay into them. Because when you make that extra 1, 2, or 3%, you're doubling your trade. Maybe you're even just got an extra 0.5% onto there. It can do things to your brain, especially when you can look at the money that you've got in there. Once you've got 100K, 50K account, whatever you see like that, this trade could equal your daily wage, your weekly wage, your monthly wage. And I promise you guys, I've taught enough people, it gets everyone. As I said at the start of the video, the hardest thing to teach people. So do stick around for that one, because if you just watch this, you're not going to know everything. Anyway, guys, that is it from me. I hope you have a great and prosperous trading day, and I'll see you in the next one. Bye.